Remember when I told you about Bloom Energy at $23 per share? While everyone was chasing the AI hype stocks, I spotted the real opportunity hiding in plain sight. Well, guess what happened next? Bloom Energy just hit $45.28. That's a 103% gain year to date and nearly 300% over the past year. But this isn't just about being right. This is about the methodology that spotted this winner while others missed it completely. Today, I'm taking a victory lap, but more importantly, I'm showing you exactly how I identified this opportunity and what it teaches us about finding the next big winner.
Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time. Let your future shine, yeah, it's Warren's money time. Wealth on the climb, hear that information flow. Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time.
The original call, why I was bullish. Let me remind you what I said in my original analysis. While everyone was focused on Tesla and traditional renewable energy plays, I identified three key catalysts that made Bloom Energy different. First, the AI data center boom. I predicted that artificial intelligence would create a massive energy demand that traditional power grids couldn't handle. Bloom Energy's fuel cells provide on-site, reliable power that can be installed in just 90 days. Perfect for AI companies that need power now, not in 5 years. Second, the partnership potential with major tech companies. I said that when hyperscale data center operators like Oracle, Microsoft, and Google needed reliable power solutions, Bloom would be their go-to choice. Third, the financial inflection point. Bloom was approaching profitability with recurring service revenues, and I predicted that once they proved sustainable margins, institutional investors would pile in. Every single one of these catalysts has now materialized. Oracle partnership? Check. Record profitability? Check. AI data center boom creating massive demand? Double check. If you're finding value in this analysis, you need to know about my free newsletter on Substack. Every week, I send out exclusive market insights, stock picks, and investment frameworks you won't find anywhere else. It's completely free, and over 2,500 investors are already getting these delivered straight to their inbox. The link is pinned in the comments and in the description below. Don't miss out on these weekly insights. What actually happened? The perfect storm. The results exceeded even my bullish expectations. Let me break down what happened quarter by quarter. Q2 2025, earnings explosion. Bloom Energy delivered a 10-cent earnings per share versus 1 cent expected. That's a 900% earnings surprise. Revenue hit $401 million versus $376 million expected. Oracle partnership announcement. Just as I predicted, Oracle selected Bloom Energy to power its AI data centers. This wasn't just any deal, it's an islanded load-following system that proves Bloom can handle massive variable AI workloads. Manufacturing. Scale up. Bloom announced plans to double their manufacturing capacity by the end of next year. This is exactly what I said would happen once demand inflection occurred. Financial metrics. The company hit record operating margins, turned its service business profitable for 6 consecutive quarters, and generated positive cash flow from operations. But here's what validates my original thesis. This isn't just a momentum play or hype stock. This is a fundamental transformation of how we power the AI economy. The methodology, how I spotted this winner. So how did I identify this opportunity when most analysts were still skeptical? It comes down to my systematic approach to finding inflection points. Identify macro trends before they're obvious. I spotted the AI data center power crisis 18 months before most investors. While everyone focused on chips and software, I realized that power infrastructure would be the bottleneck. Find the best positioned companies. Bloom Energy wasn't just another energy company. They had the only technology that could deliver industrial scale power in months, not years. Their fuel cells are perfect for data centers that can't wait for grid upgrades. Wait for financial inflection. I didn't just buy the story, I waited for proof that the business model was working. When their service margins started expanding and they guided toward profitability, that was my signal. Ignore the noise. Wall Street was still skeptical about fuel cells when I made my call. Analysts had price targets in the 20s, while I saw potential for 40 plus. Sometimes you have to think independently of the crowd. This methodology works because it combines top-down macro analysis with bottom-up fundamental research. Most investors do one or the other. I do both. What this means going forward? Now that we've had our victory lap, what does this mean for Bloom Energy going forward? This is where it gets really interesting. Bull case. The AI power boom is just beginning. Data center power demand is expected to grow from 55 gigawatts by 2030. That's like adding 55 nuclear power plants. Traditional utilities can't build that fast. Bloom Energy could capture a significant portion of this market. Bear case. Valuation and competition concerns. At $45, Bloom trades at high multiples to current earnings. Competition from other power solutions could intensify. Some investors might take profits after such massive gains. My current take. I think Bloom Energy is transitioning from a speculative growth story to a proven infrastructure play. The Oracle partnership validates the technology. The financial results prove the business model, but at these levels, position sizing and risk management become critical. For existing holders, I'd consider taking some profits while keeping a core position. For new investors, I'd wait for any pullback below $40 before adding exposure. What can you learn from this Bloom Energy success story? Here are the key takeaways. Lesson 1. Infrastructure follows innovation. Every major technology boom creates infrastructure bottlenecks. AI needed power. Bloom Energy solved that problem. Look for the next infrastructure need that new technologies will create. Lesson 2. Timing the inflection. I didn't just identify a good company. I identified the moment when their fundamentals were about to inflect. Watch for companies approaching profitability in large, growing markets. Lesson 3. Independent thinking beats consensus. When I made my Bloom Energy call, consensus price targets were much lower. Sometimes the best opportunities exist where institutional investors are still skeptical, but fundamentals are improving. Lesson 4. Have a thesis and test it. I made specific predictions about partnerships, profitability, and stock performance. When those predictions came true, it validated both the analysis and the methodology. The stock market rewards those who can see inflection points before they're obvious. Bloom Energy is proof that this approach works. So there you have it, my Bloom Energy victory lap. From $23 to $45 in less than a year, driven by exactly the catalyst I predicted. But this isn't about being right for the sake of being right. This is about proving that systematic fundamental analysis can identify massive opportunities before they become obvious to everyone else. What's the next Bloom Energy hiding in plain sight? What infrastructure bottlenecks will the next wave of innovation create? These are the questions I'm researching right now. If you want to see my analysis before the next big winner becomes obvious, make sure you're subscribed with notifications turned on. And if this breakdown helped you understand how to spot inflection points, hit that like button. I have many videos coming with more AI gems. You won't want to miss it. Thanks for watching.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.